And welcome to Finance Focus with Andrew. And this is a platform where we engage in conversations that endeavor to enhance our financial literacy. In case you are coming across this channel for the first time, I will request that you consider subscribing, turn on the notification bell so that you get notified anytime we have such sessions and anytime we get to post a new financial tip. I post a new financial tip every other day. So every day at 7 p.m. we drop a video that is that has something to do with your personal finances. So consider subscribing to the channel so that you get notified anytime we post a new financial tip. Now, on this session, we are supposed to talk about the treasury bonds that have been floated for the month of October 2025. We have some treasury bonds that are on offer for the month of September 2025. We have some treasury bonds that are on offer for the month of September 2025. And that is what we are going to discuss in this particular session. So in case you are interested, or in case you have been interested in learning about treasury bonds, this is your session. I always ensure to explain things in a manner that everyone will feel engaged, everyone will be able to understand whatever it is that we are discussing. So in case you are interested in learning about treasury bonds, this is your session. So hang around. In case you have any question, drop them in the comment section and be sure that I will get to address them as we continue. So with me here on my screen, I have the prospectus, something that we call the prospectus of a bond. And when you talk about a prospectus, it is just a document giving the details of the particular bonds that have been floated. So every time a bond is floated, there must be something that we call as a prospectus. A bond cannot be issued without the Central Bank of Kenya issuing a prospectus. So this is what we call a prospectus, and it is what that gives the information of the bonds that have been floated. Everything that you need to know about that particular bond is contained in this particular prospectus. So it is very important to get to understand every other details on this prospectus before you invest in the bonds involved. So we are going to go through this prospectus, explaining each and every component, each and every term in this prospectus, so that we ensure you fully understand what you'll be signing up for in case you end up investing in this particular bond. So hang around, go with me each and every step. Let me know where it might not be clear so that we can be able to give further explanation, because the motivation is for everyone to get to understand in case they are interested in investing in treasury bonds, and so that everyone can be able to understand what they are signing up for. So from the prospectus reads, prospectus for reopened 15 and 20-year fixed coupon treasury bonds. So you can see we have two treasury bonds that are on offer for the month of October 2025. And I request that we start with the first bond with the title FXD1/2018/015. I always say that just by checking the title, there are a few things that you should be able to understand about the bond that we are dealing with. So FXD1 tells you that this is not an infrastructure bond, and it means that it is a taxable bond. It means that any interest that you earn from this particular bond will be subject to withholding tax. Stroke 2018 tells you that this is a bond that was issued in 2018 and we are in 2025, meaning that it is not a new bond, it is a reopening. It is a bond that has been in the market. It is a reopening, and there are some things that we will talk about that you need to note when it comes to reopening bonds. Now, stroke 015 tells you that the tenor of that particular bond when it was issued was 15 years. But right now, it is not 15 years, as we shall see in the next line. So the next line talks about the tenor of that particular bond. Now, the tenor of the bond is 15 years, but you can see into bracket, it is 7.7 years to maturity. Why is it that way? This is the reason behind the tenor of 7.7 years. Even if we have read that the bond is through 015. So the bond had a tenor of 15 years when it was first issued in 2015. But right now, we are in 2025. It means 7.5 years have elapsed since the bond was issued. And that's why if you take 15, you subtract the 7.5 years that have passed. That is where we get 7.7 years. Now, the other thing that we get to note is the coupon rate that is being paid for the bond is 12.65%. So the coupon rate is very important because that is what tells you, or that is what indicates what you will take home at the end of the day. So that is what tells you the kind of return that you will get to take home at the end of the day. So 12.65% is the coupon of the bond. And if you get to compare that with the market that we are in right now, I would say that it's still a good deal, because the current rates can be indicated by the rates of the treasury bills. That is what that gives the current rates of interest rates for the government securities. And if you check last week's auction, the rates ranges somewhere between 7.9% for the 91 days treasury bill and 9.5 for the 364 days treasury bill. So that is where we are in terms of interest rates. Currently, we are somewhere between 7% and 9%. So getting a chance to invest at a rate of 12.65%, I'll still consider that as a good deal. Now, the maturity date, it is the date that these bonds get to mature. It is the date that your contracts gets to end. The contract between you and the central bank or the government of Kenya gets to end, and you get back your capital. So you can see that it is on the 9th of May 2033. Now, this is not an infrastructure bond. So maturity date is very important, because you see, for infrastructure bond, some of you might be aware that we have what we call you get your money back in bits, something that we call redemption structure. But for this particular or this kind of bonds, we don't have such kind of an arrangement. So if you are sticking with the bond, you'll get your full repayment amount at the end of the 7.5 years. That is on the 9th of May 2033. The value date of the bond, that is when you get to start or you get to an agreement with the Central Bank of Kenya. It will be on the 20th of October 2025. Now, let's go to the period of sale. Period of sale is the period in which that bonds remains open for bidding. Even when artists are going to perform, they give themselves time to sell tickets. They give themselves 2 weeks, 3 weeks, a month to sell tickets. It is the same with the Central Bank of Kenya. They don't float a bond today and get to start to close it today. So there is a period between the 26th of September, that is yesterday, to the 15th of October 2025. So we have about 3 weeks, let's say 3 weeks, for the interested investors to place their bids. There is something, then you can see that the deadline, the bid submission deadline is on the 15th of September. 2025 by 10 a.m. We have said that that is the period we have. So if you are interested in this particular bond, you need to have placed your bid by the 15th of October 2025. The auction ends or the auction will be performed that day, that same day, the 15th of October 2025. That is immediately after the bidding process has been closed. Now, the settlement date is on the 21st of October 2025. You see, the bidding, there are some processes that takes place after the bidding is closed. Now, the bidding will be closed on 15th. The auction will be closed on will be done on 15th. Then, if your bid will be successful, you'll get to be notified. The Central Bank of Kenya will share with you something that we call a prospectus. Not a prospectus, sorry, a payment key that you will use to pay for the bond. That is, the payment key is the number that you'll go with to your commercial banker and request them to do the transfer to the Central Bank of Kenya for you. So that process there will take some 2 days, but by the time you get to the 21st of October 2025, your money ought to have reached the Central Bank of Kenya. It is usually that particular day by 2 p.m. So if your bid was successful, you are given a payment key, and by 2 p.m., 21st of October 2025, your money ought to have reached the Central Bank of Kenya. It is important to understand that it is you that will transfer the money to the Central Bank of Kenya. It is not the Central Bank of Kenya that will deduct the money from your account. Some people make mistakes of thinking that now that your bid was successful, the Central Bank of Kenya will automatically deduct the money from your account. That will not happen. So it is you that will have to go and do an RTGS from your commercial bank to the Central Bank of Kenya. So get that clear. The purpose of the bond, you can see it is budgetary support. We are a country that we keep punching above our stomach, so we have to find sources of funds to support the budget. So that is the purpose of this particular budget. Then there are two types of bidding when it comes to treasury, to reopened treasury bonds. Now, you can bid competitively and you can bid non-competitively. Now, I'll explain that when explaining about the pricing of the bond. So, hang around so that you get to understand the thing about competitive bidding and non-competitive bidding in some few minutes. I will not take too long. So, hang around so that you get to get that bit of competitive bidding and non-competitive bidding. This is not the best time to explain to it because I need some demonstration to do that. But for non-competitive bidders, the minimum is 50,000 and the maximum is 50 million. And for the competitive bidders, the minimum amount is 2 million. So for you to get to competitive bidding, you need a minimum amount of 2 million. Now, we are done with the first bond, and essentially we are like done with even the second bond because it is just a repeat of what I have been saying. So in case you have a question, keep dropping them in the comment section. I can see someone in the comment section saying, Acha stories ajaba. I'm one person who like criticism, but I like, even if you are giving some negative feedback, ensure you point out what I said that is wrong, not just throwing words here and there. So when you are comment hivo anaitwa rampage, you can come clear and say whatever that I said wrong, and feel free to correct me. I'm very open to learning, but don't just give negative comment that is not educating anyone. We are here to help each other. So If you have nothing important to contribute to the conversation, you better not keep your keyboard busy. Now, let's move to the second bond, and that is the FXD1 stroke 2021 stroke 020. Now, the same as the first bond, it is a taxable bond. I mentioned to talk about the withholding tax when talking about the first bond, but you can see the withholding tax is at 10%. We'll mention that in this particular bond. FXD1 stroke 2021 stroke 020. So FXD1 tells you that this is a taxable bond, that anything that you get from this particular bond, 10% of it will be taken back by the same government that you are lending to. Stroke 2021 means that this is a bond that was issued in 2021. Stroke 020 means that the tenor of this bond when it was first issued was 20 years. But you can see that the time to maturity now is around 15.9 years. The reason behind that is that the bond was issued in 2021, we are in 2025, so it means around 4 years have elapsed. So 20 years minus 4 years, that's why we are having 15.9 years. So I hope you get to understand the part of maturity of the bond. Now, the coupon rate for this one is a bit higher than the other one. The coupon rate is at 13.444%. And I have said, and I had said in the other bond, the thing that can give you a clear picture, sorry for that, the thing that can give you a very clear picture of the interest rates as far as government securities are concerned, it is the treasury bills that are offered on every other week. And if you check last week's auction, the interest rate for treasury bills are between 7.9% for the 91 days and 9.5% for the 364 days. So that is the current interest rate that you can get from government securities. So getting a bond that is giving you a 13.44, we can still consider that to be a good deal. The withholding tax is 10%, and it is 10% of the interest, not 10% of the principal. When the Central Bank of Kenya posted these prospectus on their Facebook page, the first comment that I saw there was someone asking, how comes the coupon rate is 12% and the withholding tax is 10%? So what I got from that comment is that this person thinks that it is 12%, you subtract the withholding tax of 10%, so technically the investors are taking home 2%. That is not the case, because when we are talking about 12%, we are talking about 12% of the principal, but when we are talking about 10% withholding tax, we are talking about 10% of the interest, not the principal. So don't get to confuse between the two and get to wonder, how do you get a return of 13.4%, then a withholding tax of 10%? It means you are taking home 3%. That is not the case. So it is very important that we get to understand. The value date, the maturity date for the bond is on the 22nd of September 2041. And as I said, these are not infrastructure bonds, so there's nothing that like RA redemption or partial redemption. You have to wait until the maturity date, and unless you decide to sell the bond in the secondary market. Now, the other features you can see, they are the same as of the other bond, but for the sake of those people who are not there when I was going through the features of the other bond, we can still get to repeat. And I request that you continue subscribing to the channel so that you get notified anytime we post this kind of content. So if this is your cup of tea, this is the kind of content that we get to post on a daily basis. So if it is part of what you're interested in learning, ensure to subscribe, turn on the notification bell so that you get notified anytime we post such a video. Now, the period of sale is between the 26th of September 2025 and the 15th of October 2025. And the period of sale is simply the 3 weeks that investors has been given to understand the prospectus, to make to check their bank balances, and to make decisions and place your bids. So it is just a period of sale, giving people a chance to think. I like explaining this one using the analogy of the artist. You don't wake up and just create an event that same day. You announce it to people that same day, and you expect them to turn up. What you do is that you create an event in December and start selling your tickets in the month of November and the part of the December. It is the same with the Central Bank of Kenya. So the CBK gives investors around 3 weeks for them to think about this offer, for them to check whether they are able to invest, and for them to make their decisions and place their bids. So that is technically what we call the period of sale. So you ought to have made a decision and placed a bid by the 15th of October 2025 by 10 a.m. That is when the bid will be closing. The auction date is the same day that the bids gets to close, and the settlement date is on the 21st of October 2025. You can see there is a difference between the auction date and the settlement date. The auction is conducted after bidding to determine whose bid was successful, whose bid was not successful. Because we have seen a trend by the Central Bank of Kenya rejecting a lot of bids mercilessly. I think the Central Bank of Kenya is very clear when it comes to cheap credit. They are looking for very cheap loans. So they are rejecting bids without any apologies. So the auction is the one that will determine which bids were successful and which ones were not. Once your bid is successful, the Central Bank of Kenya will notify you that your bid was successful. They will again send you what we call the payment key, and payment key is a code very similar to that of M-Pesa transaction that you will use to go and make payment to the Central Bank of Kenya. Now, the payment for these treasury bonds or government securities in general, it is you, the investor, that will have to send the money from your commercial bank to the Central Bank of Kenya. Don't make a mistake of thinking that the Central Bank of Kenya will deduct money automatically from your account. You have to visit your commercial bank with the payment key and request them to make a transfer for you, an RTGS, to the Central Bank of Kenya, and ensure that you give them that particular payment key, because it is that payment key that matches the payment that you are making and the bid that you made. So without the payment key, your payment will not be successful. Then the amount that the government is seeking is 50 billion for each of the bonds. The purpose is budgetary support. We prepared a budget that we could not fully fund, so the government has to borrow either way, whether domestically or locally. Non-competitive bidding and competitive bidding, I said I'm explaining that in a few, so hang around so that you can understand the difference between competitive bidding and the non-competitive bidding. But you can see that for the non-competitive bidding, the minimum amount is 50,000 and the maximum is 50,000. For the competitive bidding, the minimum is 2 million. Then there's something that I would like to mention here when it comes to amount. The minimum is 50,000 and any additional amount must be a multiple of 50,000. So understand that you cannot invest 70,000 in treasury bonds because the amount has to be a multiple of 50,000. So it's either you're investing 50,000, 100, 150, 200. I know you get the concept. So that is it for the two bonds. Those are the key features that you need to understand. Ensure you understand them very well. Don't sign up for something that you don't understand. Please don't sign up for something that you don't understand. When signing up for the first bond, remember you are talking about an investment of 7.7 years. So ensure that the money you are committing there is money that you can be able to work without for the next 7.5 years. Before we move to the lower part of the prospectus, I forgot mentioning about the actual values that you expect when you invest in treasury bonds. So this is it. It is very simple. Nothing is complicated when it comes to calculating the interest rates. It is a simple interest, and I will show you the figures as they are, because I'm not here to market the Central Bank of Kenya, so I will not try to you that you'll earn big from the treasury bonds. So here are the figures. I like using an example of someone who decides to invest 100,000, let's say in the second bond that is paying 13.444%. So if you do 100,000, 13.4% of 100,000, that automatically comes to 13,444. But remember that from the 13,244, part of that, 10% belongs to the government. So it is the 90% that belongs to you. So 90% of 13,444 is around 12,099 shillings. So every year, if you give the government 100,000 in this particular treasury bond, every year the government will give you back 12,099 shillings. As we shall see in a few minutes, the interest is paid in 2 installments. So in each and every installment, you'll get 6,049 shillings. So at after every 6 months, you'll be expecting 6,049 shillings for the next how many years? 15 years. So that is the kind of figures that we are talking about. Remember, it is a low risk, so you can't expect the return like those of equities from treasury bonds, because the risk levels are different, and so the returns levels has to be different. Now, let's get to some important things that we might get to ignore down there and end up messing ourselves and not understanding what we are signing up for. I'm reminding you to keep subscribing to the channel. If this is kind of things that you like to learn, this is the kind of content that we post on this particular channel. So subscribe, turn on the notification bell so that you get notified anytime we get to post a new financial tip. Now, let's go to payments. You see they are saying all successful bidders should obtain payments key and amounts payable from the CBK DhowCSD investor portal app under the transaction tab on Friday, October 17th, 2025 for FXD1/2018-015, FXD1 2021-020. Now, they have mentioned DhowCSD investor portal or app. This is the best thing about treasury bonds nowadays. I think a few years ago, if you wanted to invest in treasury bonds, you had to visit the Central Bank of Kenya in person. You had to follow up for your bids and check them, I think, on the newspaper, whether it was successful or not. But this is the case. Nowadays, you can be able to do all this at the comfort of your bed. All you need is an app or get to the CBK portal. It is called DhowCSD. You can see the name on that prospectus. Go get that app, DhowCSD, or get to your browser and just type Central Bank of Kenya DhowCSD portal. You can be able to open an account there. You will be able to do your bidding there, and you'll be able to see anything about your bonds or treasury bills on that portal. So this process is fully digitized, so you can be able to do everything at the comfort of your home. That is the beauty part of it. You can be able to get everything digitally. Now, You see, they are saying that defaulters may be suspended from subsequent investment in government securities. I think these are people who have failed to honor their payments after bidding, or maybe the Central Bank of Kenya has data, maybe from the central bank, from the commercial banks of defaulters, and if you are a defaulter, you might not be accepted to bid in this particular bids. The other thing is you need to understand is that don't make a bid if you don't have money. If you make 3 subsequent bids without sending the money, the Central Bank of Kenya will automatically block you from accessing the portal until you visit them by yourself. Now, the Central Bank of Kenya reserves the right to accept application in full or part, therefore, or reject them in total without giving any reason. So the Central Bank of Kenya has the right to just reject your bond for whatever reason, and they are telling you that they don't owe you any explanation. Secondary trading. So secondary trading in multiples of 50,000 commences on Tuesday, October 21st for both bonds. It is important to understand that whatever that the CBK does is issuing bond as a primary market. So this all this that we are discussing is what we call a primary market, buying directly from the Central Bank of Kenya. But it does not mean that you can only buy bonds from the Central Bank of Kenya. You can buy bonds any day, any time in the secondary market. The only difference is that you will need a broker or an agent to assist you access the secondary market. A broker might be your commercial bank or investment bank that have been regulated to do that kind of work. You need an agent or a broker. Also, the chances of you buying a bond in the secondary market, it depends on availability of a willing seller and a willing buyer. So that is the kind of operation that gets to happen there. Then rediscounting. When you talk about rediscounting, it simply means getting your money back before maturity. That is what we call rediscounting. So the Central Bank of Kenya will rediscount bonds as a last resort at 3% above the prevailing market yield or coupon rate, whichever is higher. Upon receiving the written instructions from investors via the email, rediscounts at centralbankofkenya.go.ke. Now, that is a very important point that you should not ignore. What gets to happen, you see, we have said that the time to maturity for these bonds, one is 7.7 years and the other one is 15.9 years. It is very important to understand the terms. Ensure that the money you are committing there, it is money that you can invest for that long. Because if you need that money in between, that is before maturity, you have 2 options. And option number 1 is selling that bond in the secondary market. Remember that you'll have to sell it at the prevailing rate at that time you will be wanting to sell it. So we cannot tell at what price you'll be able to sell your bond. Right now we cannot predict what kind of price you'll get in the market at that time. Then the Central Bank of Kenya will rediscount that bond for you as a last resort. If you don't get another option in the secondary market, you can go back to the Central Bank of Kenya and tell them, I really want my money, but I cannot find a buyer in the secondary market. Assist me to get back my money. They will rediscount your bond, but at 3% above the prevailing market yield or coupon rate, whichever that is higher. There's something that you should understand, that there is an inverse or an opposite relationship between the interest rates that they are quoting and the price of the bond. You see, they want to rediscount your bond and at an interest rate that is higher, that is 3% is higher than what is prevailing in the market. So it means that if they rediscount your bond at an interest rate that is higher by 3 percentage points, the price of your bond will be so down drastically. And I'll show some figures in the next page. In fact, let's just move to the page on pricing of reopened bonds so that you understand the part of rediscounting with 3 percentages higher, and the importance of understanding the features of the bond so that you don't get yourself to a point where you want your bond rediscounted. Now, allow me to move to the to the next page. So that is what we call pricing tables. Anytime reopened bonds are issued, they need to be followed by what we call pricing tables, because they are not new bonds. You see, when you are talking about a new bond, if I want to invest 100,000, it will be very clear that what I will set to the Central Bank of Kenya is 100,000. But the case is quite different when it comes to reopened bonds. Now let's move to pricing. Before we do that, I continue welcome you to the platform. So for those who are joining us now, continue subscribing to the channel. If this kind of information is your cup of tea, subscribe to the channel so that you get notified anytime we get to post a new financial tip. Now, you can see on this table, we have something that we call the yield and the clean price. And if you have a clean price, it means we have some dirty price somewhere. Now, what you get to pay for when it comes to reopened bonds, it is something that we call the dirty price. I'll show you how it comes about. For now, let's deal with this clean price. That is better. I said about competitive bidding and non-competitive bidding. So non-competitive bidding is where, as a small investor, I'm telling the Central Bank of Kenya, whatever interest rate, whatever yield that is determined by the market, I'm comfortable with it. Whatever yield that is managed, that is determined by the auction, by the other investors, the market average that the auction will determine, me, I'm very comfortable with that. But when it comes to competitive bidding, you tell the Central Bank of Kenya, I want you to give you my 3 million, but this is the kind of the yield that I demand. But don't make a mistake. Both competitive bidders and non-competitive bidders will still be paid interest at the same coupon rate. The coupon rate is fixed and it is not changing. What changes, what competitive bidding and non-competitive bidding differentiates the two is the price, it's the initial price that they pay for the bond. Look at these tables very carefully. You can see that as the interest goes up, the price of the bond reduces. You see, at a yield of 12%, the price of the bond is 103.1525. What that 103 means is that every unit of that bond will be sold at 103. So if I bidded 100,000, what I'll sell to the Central Bank of Kenya is 103,000. So I'll have bought that bond above 100, and it is something that we call buying a bond at a premium. But the technical terms are not so important. So you can see as the price goes, as the yield goes down, the price gets as the yield goes up, the price gets to reduce. So if I'm an uncompetitive bidder, I'll tell the Central Bank of Kenya, any yield that is determined, mimi niko tu sawa. But a competitive bidder now has an opportunity to say, I want to invest my 3 million, but I'm demanding a yield of 13.5%. You see, a yield of 13.5% will make them pay 96.5850 per unit. Hope it is clear. Another investor will come, I want to invest my 20 million, and I demand a yield of 14%. And with a yield of 14%, they will pay 93.7879 per unit. I hope you get the point. I determine the yield, I pay a lower price. But here is the catch. The Central Bank of Kenya nowadays is very merciless. Once they determine the market average, the market average yield, let's say that the market average yield gets to be 13%, meaning that you will have to pay 98.3183. That is what the non-competitive bidder will have to pay. You might find that they put a cutoff that anyone who had placed a bid that demanded a yield of above 13.3, they reject, and that is why we are finding so many bids being rejected nowadays. So if you really mean to invest your money, I would advise you to consider bidding non-competitively, because very few competitive bids are making it out successful nowadays. There's an important information that is down there that I don't want us to miss. The bond attracts accrued interest of 5.3519 per 100. Withholding tax is computed on clean prices. So, example, if the quoted yield is 12.6%, that is the same as the coupon. You see that the clean price is 99.9746. That is from the table. Then the accrued interest is 5.3519. What is this animal that we are calling an accrued interest? Now, allow me to move to the next slide just for a minute. You can see for this FXD1/2018 sorry, niko na homa lakini lazima tusome. So you can see this bond pays coupons in the month of November and in the month of May. So right now we are in the month of September. So it means that this bond last paid coupons in the month of May. Get me very clearly. This bond last paid coupons in the month of May, and they will be paying coupon again in the month of November. But right now, you'll buy this bond in October. So you see, you'll buy the bond in October, and immediately the next month, you'll get your first coupon. But you'll get coupon that is worth 6 months. You have been holding the bond for 1 month, but you'll be paid a coupon that is worth 6 months. It means there is a coupon that the bond has accumulated from there is the interest that the bond has accumulated from the month of May to the month of October that you will have to pay for when you are buying the bond, because a month later you will be given that interest. I hope you are clear. It is not extra charges. You are just paying for interest that will be given to you that does not belong to you. So accrued interest is interest that will be paid to you but does not belong to you. I hope the point is clear. So allow me to go back to this particular table. So it is now the total of the clean price and the accrued interest that gives the dirty price. So that is where the dirty price is coming from. So the clean price, you add the accrued interest, and I hope the point on accrued interest is very clear. You get the dirty price. I hope you get now the concept behind the pricing when it comes to reopened bonds. As we head to our conclusion, this is our final page, and this page just shows you when interest will be paid for this particular bond. You see, the beauty about these things, or the beauty about buying treasury bonds, sorry for that. Now, the beauty about buying treasury bonds, it is not like lending money to your friend. You see, when you lend money to your friend, they will pay you when they have the money. They don't give you a particular date when they will be paying back your money. In fact, they can give you a date, but when that date comes, they start giving you some funny stories. But the case is different when it comes to the Central Bank of Kenya. So interest rates, it's paid on some predetermined dates. What it means is that you know the particular date that you expect to get your interest paid. Like the next time the first bond pays interest is on the 17th of November 2025. Regardless whether the CBK governor will be having a cold, regardless whether the CBK governor will not be in the mood, you will automatically get your coupons. They will not just wait and say, si tulipe ya majamaa interest predetermined. So when that date comes, you get your interest automatically. So the first bond pays coupons in the month of November and May, and the other bond pays interest in the month of February and August. So, and the dates are already predetermined. At that point, I would say that I have said a lot, and I think I have said as much as needs to be said as far as this particular are concerned. In case anyone need a clarification on anything that we have mentioned, I would request them to post it on the comment section so that we get to address it before we get to conclude this particular session. I hope it has been an engaging session. Got to understand something that you didn't know. But in case something was not clear as far as the two treasury bonds are concerned, feel free to post your question. But again, if everything was clear, I think we can end that session at that particular point, and request you to subscribe to the channel. Of course, I will continue making other videos as far as this particular treasury bond is concerned, so that this is not the end. I'll make other several videos explaining the features of the bonds again. So if you missed this session, just ensure to subscribe, turn on the notification bell so that you get notified when I get now to make a video about the treasury bonds. But in case you have a question, you still have a question about these two particular treasury bonds, maybe something that was not because of the presentation, you can drop it in the comment section, and you get to address it before we end the session. So I'm waiting for any questions that might be there, anything that might not have been clear through the session, anything new that you want to learn about treasury bonds. Just drop that question in the comment section. Now it seems that there is no question. I hope the session has benefited to someone. Someone has gotten to understand something that they didn't know about treasury bonds, and maybe it will assist them make the next step as far as their personal finance is concerned. And it is my joy to see people get more financially literate and make steps. Otherwise, just subscribe to the channel, turn on the notification bell so that you get notified the next time we get to have such session, and the next time we get to post such content, so that we can continue learning together. Until next time we get to interact, stay financially woke. Thank you.